Our next guest actually says the key risk facing markets is that the Fed needs to keep rates high for longer and for so long that it causes a recession. Mark Matthews is head of Asia research at Julius Baer. And Mark, how much of a risk are you ascribing to that happening here, that we do actually enter a recessionary or contraction environment for the US economy?
Well, very low. So it is the key risk, but I don't think it will materialize. And we are penciling in 3 rate cuts this year. But because the economy is so strong, they won't happen, we think, until the very end of the year. And specifically, the months we're looking for are September and November and December.
And what do you think will be happening in the US economy at that point to necessitate those cuts? What data sets are you watching in particular? Are you already seeing any sort of signals that are building that we do need to see rate cuts?
I think the key thing will be the inflation reading. And as you know, the last mile has proved very challenging. We're kind of stuck at about 3.5 for the headline CPI. I think we'll probably be down around 3 by the end of the year, perhaps even south of that. If you look at the real-time rental indices in the United States and factor in the big lag between those and when they appear in the CPI data, that would infer inflation rate of slightly less than 3% by the end of this year. And although the Fed says they want to, I think that's not particularly realistic. But that's what we're looking for inflation to come down a little bit more. Optically, it's not possible to cut with a headline CPI of 3.5 just now.
Mark, I am really intrigued by this view of 3, even if the 3 comes towards the end of the year, because there has been so much stubbornness and resilience in a lot of the data sets, right? Not just inflation for the US. What is really going to change between now and then? And do you think there is a risk to your forecast?
Yes, there is certainly a risk. There's a risk that the inflation does stay very sticky, and there are several components that are contributing to it beyond the shelter component. A whole bunch of smaller things, but you add them up and they are material, like food outside of home, auto insurance. So I don't know. It's something we'll only be able to see at the time, but for now, our assumption is that it will come down, but not to 2%.